Well, there are a number of exciting new developments happening in the South African venture capital market, specifically around legislation that will encourage new investors to participate in the sector. Joining us on the desk is Jeff Miller, he's CEO of Grovest Venture Capital, and Marc, Elias, who's the CEO of Seed Engine as well. Welcome to you both, and thanks so much for joining us. Before we get into what legislation is set to do and what kind of impact it's set to have on the venture capital space moving forward, let's take a look at the state of industry right now, where it stands in your books, Jeff.
Well, it's a very exciting space at this point in time. I think that traditionally the South African VC market has been quite immature, but over the last year or so there's been quite a lot of movement and we've seen it develop. So the ecosystem is happening. There's a whole lot of VC funds, a whole lot of incubators, accelerators being developed, Tech in Braam, Silicon Cape, which making the space very, very exciting at the moment.
Mm-hmm. Why the hesitance to start off with, and what's acting as the driving force right now and the motivating force?
In terms of investment and starting businesses, entrepreneurs very seldom know exactly where they can go. There are very few platforms that are available to them that they make use of that really that are part of that ecosystem and introduce them to the greater, call it stakeholders of that ecosystem, including the likes of the venture capitalists. We're in the accelerator space, the incubator space. Too many people want to do it on their own and they don't want the help in getting there, but they're all calling for funding.
Is it an education factor, an awareness factor? Because of course, what any entrepreneur doesn't want is someone else taking control of their business.
I think that it's an education factor, but I also think it's a cultural factor. People need to be able to let go. They need to be able to ask for help. At the same time, they also need to understand what the nature of that help is that's out there.
Mm-hmm. Sure. Jeff, maybe I'll throw a question to you. I get the sense, and I genuinely believe in South Africa there is more money than ideas at the moment. Do we agree that that's a starting point?
I think there's money, but it's very hard to get that money. So yes, you've got money from VCs, you have money from family offices and high net worth individuals. But on the other side, we find that there's a lot of talent, but they haven't had a platform where to express themselves. And so we're very, very excited about the likes of a Seed Engine, which accelerator, which actually helps create that business model, get them some traction. So when we as venture capitalists or a venture capital fund such as Grovest looking to invest, we're getting stock. We see that this whole ecosystem is a feeder for the venture capital market. So, and I don't believe that, so I think Marc's got a big responsibility to get those investments to a certain stage before we can even have a look in.
And in terms of the roles of the venture capitalist, obviously you're providing funding, but how much of a mentoring role is there going to be, and how hands-on will that be?
Very, very much, because the guys who have, they early stage business people, you know, they're quite green, in fact, and I believe that they've got great ideas. They might be very skilled in technical, you know, tech skills, but in terms of actual business and in terms of network, which is very, very important, is you might have, you know, you have this great idea, but you have to actually know how to get it into the market, and I think that's where we can help. Yeah. Is because of our networks and having that experience.
Marc, what's your assessment of the quality of startup businesses that we have in South Africa?
I think that one cannot doubt that there's incredible talent in South Africa. There are a lot of startup ideas, and there are lots of ideas that sit on shelves and never really come to fruition for reasons that, you know, if you've got a great idea and you approach a venture capitalist, they're often going to turn around and play a bit of a tick box exercise and say, traction, revenue, how much is there, how much is coming? And these are questions that a lot of entrepreneurs who have amazing ideas and all the talent to back those ideas don't know. And so that's where we talk about that ecosystem. We come back to those stakeholders and building the steps up towards the venture capital firms, the family offices, the angel investors, the private equity firms. Everyone needs to work together, but people are forgetting that, or a lot of entrepreneurs are, they're kind of trying to skip steps. So that's where we come in and we say, this is the step towards that venture capital access, that funding access. But at the end of the day, you spoke about mentorship. Funding is not the biggest problem here. You know, we often say in our environment that if funding is your only problem, the chances are you've got other problems.
Sure, but don't you argue, the argument's often made that the VCs set their hurdle rates too high. They're expecting a too high return on capital for what majority of a lot of the businesses that you're going to see are ever going to realize. And that seems to be a problem in that we're all chasing some home run idea. Has that perception changed, or has the type of business and relationship between VC and startup changed enough to be able to say, I'm actually prepared to give up my hurdle rate for a base for a better entry level business?
I think that the venture capital market in the last 10 years in South Africa has changed fundamentally. The first thing is it's not exclusively run by bankers anymore. It's run by, there are a lot of entrepreneurs that are involved in there, entrepreneurs that understand what it takes to get a business off the ground. The importance of mentorship has become something that has become part of the value proposition that venture capitalist is looking for. Obviously, you're always going to have the metrics that are going to drive the returns that venture capitalist is looking for, but they're also going to understand what it takes to get there. And if you're not getting there, they're able to address why and mentor the gap.
Jeff, SJ12, I mean, it's essentially tax legislation that's going to make it more attractive to be a venture or angel investor. How realistic is it as a piece of legislation that will change the operating environment, and are people taking advantage of it?
Okay, so we're the first Section 12J company to have got away in South Africa, and what it means is investors putting money into the company will be allowed 100% deduction of the investment from their taxable income. So what does it really mean? It means now that you're taking 60% of the risk, assuming you're paying tax at the marginal rate, for 100% of the upside. So conventional wisdom historically said that venture capital is high risk. But by now having this risk-adjusted formula by the tax, we now equated the playing field. So I think it has made a huge difference to the market and it's allowing the people who probably never had exposure to this asset class before to be able to put this into their portfolio, and at the same time adjusting the risk by having the tax benefit.
Does it apply to both individuals and companies? So if I'm an angel investor and I put 100,000 Rand into a business, can I claim that back?
Yes, it applies to individuals, companies and trusts. Obviously the individual and the trust getting the maximum benefit, meaning the 40% deduction, and the company only getting 28%. But I think this in itself is, in the UK, there's something called VCTs, Venture Capital Trusts, which become a huge industry, multi-billion pound industry. And I think South Africa's taking its lead from these VCTs, and I think that this way, if we can get it right, it will stimulate great investment for SMEs and early stage businesses.
Do you see VCs having more of a risk appetite generally? Because we've always seen that there's not much of an appetite for just taking on new and exciting ventures, particularly in the South African market where you seem to be extra conservative here. Do you see that changing?
Well, I think there's a huge distinction between private equity and venture capital, and I think historically in South Africa it's been very blurred. Private equity companies call venture capital companies, but they were only really looking at companies requiring growth capital. And I think this is where the distinction comes in, is venture capital companies will be, to some degree, open to, let's say, early stage businesses which are pre-revenue, or I like to call imminent revenue, and take investment in those businesses at that stage. And historically, private equity companies or venture capital companies aren't prepared to go into that early stage investment.
Yeah. To what extent, Marc, have you seen this legislative environment trigger a shift in appetite amongst venture capitalists?
We had our Seed Engine demo day on the 3rd of May at Gibbs University. And when we started Seed Engine in September last year, we were welcomed by the VC community. The angel community was a bit of a blank spot for us, a blank dot there, because we still needed to understand exactly how big that was. What we've seen with the likes of Grovest is a lot of those angel investors are coming out to play. They're coming out to get involved with ventures directly, or get involved with the funds directly. And at that demo day, we had 140 investors in the audience. And as far as I understand, I stand to correction, but as a seed stage venture capital event, it's the biggest that South Africa has seen. So I think that it's definitely making great inroads. It's definitely on the increase.